It is 9 a.m. on the dot, Pacific Daylight Time. It is the 20th day of May, 2025, and this is episode 1099 of Bitcoin, and that sounds a hell of a lot like a tax form to me. I'm not exactly sure if I like that, but hey, it's the 1099. You got to take it. This is going to be your news day. This is why you're here, to figure out what the hell's going on with Bitcoin and the rest of the macro environment, whether it includes Bitcoin, and in today's case, we are going to talk about Ethereum because we have to. It's just too rich, man. The story I'm going to be bringing you later today is just too fun. But we are going to be talking about Jamie Dimon because the flippening has apparently occurred. We're also going to look at the U.S. Senate moving forward with the Genius Act and what that could possibly mean today. Circle is in the news, and I'm not a fan, as you know, of Jeremy Allaire for various reasons I won't get into, and I'm not a fan of Circle. However, they are in the news, and they do represent an attack vector. And we'll get into why I think that they are going to turn into a much more serious attack vector than they've ever been. We'll talk about it. Bitmine, oh God, Bitmine has launched a new service which is falling in line with the fad of Bitcoin Treasury companies, but they themselves are not looking at becoming a Bitcoin Treasury company. We'll do it. Standard Chartered is in the news. There's some weird malware that's been detected that, if you're not being terribly careful with your private keys for your Bitcoin could be absconded with because it's happened. And, we've got a retired artist who's lost his Bitcoin, and we will get to that at the end of the show, where I try to put all of my cautionary tales of how to survive this new world with Bitcoin. But first, it's raining sheer stupidity down on Germany at this point. And we'll just start off with this brief note here from Zoltan Vardai, Cointelegraph. If we do the math, the German government has now missed out on $2.3 billion of profit because they sold their Bitcoin at $57,000 per coin. If you don't remember, here's the brief note. The German government missed out on more than $2 billion worth of Bitcoin profit after selling its holdings just 1 year ago in 2024, according to blockchain intelligence firm Arkham. A German government-labeled cryptocurrency wallet sold 50,000 Bitcoin worth over $2.89 billion at an average price of $57,900 across multiple transactions during June and July. So we're coming up on the year anniversary of Germany just piling in on stupid. And it's really sad. If they had just kept it, for the German people, just kept it in trust or something like that, for the German people, they wouldn't look as stupid as they do. But Germany just can't seem to stop being dumb. And neither can France, which we'll get into in a second. But I promised you a flippening. I'm bringing you a flippening. JPMorgan CEO Jamie Dimon says that JPMorgan will now let clients buy Bitcoin. Yeah, you heard it. He announced this yesterday. JPMorgan Chase is finally allowing clients to buy Bitcoin, but CEO Jamie Dimon is still a skeptic. So you're skeptical, but there's so much demand that you actually have to provide the service, Jamie. Who's wrong? Maybe it's you that's actually wrong here, Jamie. Quote, "We are going to allow you to buy it." Oh, thank you, Jamie. Oh, thank you for allowing me to be able to purchase through your golden gates of JPMorgan Chase. I'm so happy. I'm so happy that you're, can I have more, please? Can I, please, get a little Oliver Twist out there with a little bowl in his hands, just begging the guy to, don't beat me. Please let me buy your Bitcoin. Oh my God, we are going to allow you to buy it, Diamond said at the bank's annual investor day on Monday. But we're not going to custody it. We're going to put it in statements for clients. I have no idea what the hell that means. We're not going to custody it. We're going to put it in statements for clients. Does anybody out there know what that means? Because I don't know what that means. Anyway, the decision marks a fairly notable step for the largest U.S. bank, particularly due to Diamond's history of criticizing the digital currency and the crypto market in general, and is the latest sign of Bitcoin's entry into mainstream investing. Since August, Morgan Stanley has allowed its financial advisors to pitch some specific spot Bitcoin exchange-traded funds to qualifying clients, and Diamond made it clear that his personal view of Bitcoin does remain unchanged, highlighting issues such as money laundering and the lack of clarity surrounding ownership, along with the sex trafficking and the terrorism. Oh, wow. Quote, I don't think you should smoke, but I defend your right to smoke. So I defend your right to buy Bitcoin, Diamond said. This is a man who desperately doesn't want to look like an idiot. I'm just saying. But the bank is looking at offering clients access to Bitcoin ETFs, according to a person briefed on the plans. And until now, the company has limited its crypto exposure primarily to futures-based products and not really direct ownership of Bitcoin itself. When crypto valuations were soaring in 2021, Jamie dismissed Bitcoin as, quote, worthless. He told lawmakers during the Senate hearing in late 2023 that he has always been deeply opposed to crypto, Bitcoin, etc., and that, quote, the only true case for it is criminals, drug traffickers, money laundering, and tax avoidance. If I was the government, I'd close it down. Do you remember him saying that? He'd close Bitcoin down because he's part of the government. Because, yes, the government is all-knowing, all-powerful, and yet there's no possible physical, logical way that the government could ever actually shut Bitcoin down. It just shows the sheer amount of ignorance of one of the world's wealthiest people that's in control of the world's largest bank. That's where we're at right now, ladies and gentlemen. I just want to remind y'all about that. This is Jamie Dimon. He's oh so brilliant, right? Yet he can't wrap his mind around a very simple concept. This is a dangerous situation because there's three types of knowledge. There's shit you know that you know. There's shit that you know that you don't know. But then there's the worst kind. The shit you don't know that you don't know. And that's where Jamie is right now with Bitcoin. He doesn't know what he doesn't know. He thinks he does, and he's just flat wrong. So that puts him squarely in the camp of shit that he knows that he doesn't know, except he's so wrong on what the government would actually be able to effectuate that, I'm going to move him over into the third class where he actually doesn't know what he doesn't know. But at the 2024 World Economic Forum in Davos, Switzerland, if you might remember, Diamond said, quote, Bitcoin does nothing. I call it a pet rock. This is the last time I'm talking about this with CNBC. So help me God. Well, he's going to have to be talking about it a lot more from now on. Morgan Stanley CEO Ted Pick told CNBC at this year's event in Davos that the investment bank is exploring ways to deepen its involvement in cryptocurrency markets and navigating the regulatory landscape under the pro-crypto administration of President Donald Trump. Since Trump took office in January, the Federal Deposit Insurance Corporation and the Office of the Comptroller of the Currency have rescinded their anti-crypto guidance, with the Federal Reserve partially following suit. A notice issued by the Fed in January 2023 continues to restrict banks from certain crypto-related activities while banks can now custody crypto, thanks to the repeal of an accounting rule called SAB 121, they still face certain limitations on working directly with digital asset firms. So we're in when this is an important flippening. This is what I'm getting at. This isn't just, I don't like some, like Wells Fargo saying that they're going to allow their customers to buy Bitcoin. That's not as important as the fact that you've got JPMorgan Chase and Jamie Dimon having to follow suit. They have to. They have no choice. And the only reason that they don't have a choice, they're not trying to get ahead of the curve. JPMorgan Chase and Jamie Dimon are well behind the curve. This is only coming from one source. And while I can't verify that, I'm going to make a bet that this is because their customers are saying, what the hell are you doing? Do you want me to go find another bank? Because I will go find another bank unless you're going to allow me to transact through your bank to be able to do the things that I want to do. That means that these people want to engage with Bitcoin. Sure, it may be a spot Bitcoin ETF. We can bitch and moan about that all day long and twice on Sunday. It is not going to change the temperature of the water in my pool one bit. They are going to do what they want to do. And not only are we trapped behind the glass trying to pound on it saying, no, it's so much easier to just buy the actual Bitcoin and hold it yourself. Diamond's on the other side of the room behind his own glass saying, no, you don't want to have anything to do with this. But those people that are in the room screaming have broken through Jamie Dimon's glass wall first. So this entire thing is his customer base telling Jamie Dimon what he and his bank will allow them to do. Otherwise, they're going to pull up stakes, they're going to take their ball, and they're going to go home. So yet another fight has been won in the annals of the Bitcoin war. Except for these guys out in France. France has some serious problems. I don't know if it's because they're that close to Germany. I don't really care, but we've got an interesting development here with a company called Entre Particulier, I think is how it's pronounced, .com is building a strategic reserve, but not in Bitcoin. No. They're going the other way. They're going to build a strategic Ether reserve following its recent announcement of its transformation into an Ethereum Treasury company, an ETC. Entre Particulier informs the market that a purchase program for an initial tranche of 1 million euros worth of Ether, financed by majority stakeholder Stefan Romanolazin, or however you pronounce it, was initiated on April the 29th, 2025, and will conclude on May 29th, 2025. Furthermore, to continue building this strategic shit show, the company has begun structuring various financial instruments intended for professional investors and financial partners. The company and the majority shareholder rule out the use of excessively dilutive instruments such as equity lines. The ongoing capital contribution structuring is subject to the approval of the 11th, 12th, and 13th resolutions of the general meeting, which is scheduled on June 18th for a maximum amount of 150 million euros. Listed on Euronext Growth since 2007, EntreParticulier.com has historically operated as a real estate search platform. Not a real estate company, but a real estate search platform, as if I couldn't just do that with Google, but whatever. In April 2025, it began to shift towards decentralized finance and real-world asset tokenization, as well as this brand new strategic Ethereum reserve. So this is a company who has one financer behind it, and that financer has chosen death instead of life. So stupidity is so French, it must be liberated again. Let's move back over to the United States, where the Senate has finally moved forward with the genius stablecoin bill. God, these names are they're killing me. Braden Lindria from Cointelegraph. The United States Senate has voted to advance a key stablecoin regulating bill after Democratic senators blocked an earlier attempt to move the bill forward over concerns about President Donald Trump's sprawling crypto empire. Oh, it's sprawling, is it? A key procedural vote on the Guiding and Establishing National Innovation for U.S. Stablecoins Act, otherwise known as the Genius Act, passed in a 66-32 vote May the 19th local time. Several Democrats, including Mark Warner, Adam Schiff, Ruben Gallego, changed their votes. The fact that Adam Schiff changed his votes is really kind of telling here, but whatever. They changed their votes to pass the motion to invoke cloture, which will now set the bill up for debate upon the Senate floor. Republican Senator Cynthia Lummis, one of the bill's key backers, said on May the 15th that she thinks it's a fair target to have the Genius Act passed by May the 26th, which is Memorial Day in the United States. Several Democratic senators withdrew support for the bill on May the 8th, blocking a motion to move it forward, citing concerns over potential conflicts of interest involving Trump's crypto ventures and the bill's anti-money laundering provisions. Warner expressed concerns about Trump's crypto ventures in a statement before the vote, but said that the United States couldn't afford to keep standing on the sidelines while the crypto industry evolves. Quote, "We cannot allow that corruption to blind us to the broader reality. Blockchain technology is here to stay. Oh my God, it's on the blockchain. If American lawmakers don't shape it, others will, and not in ways that serves our interests or democratic values." End quote. Okay. That's all we need to know about that. So they blocked it once. They didn't get it this time. And in fact, it was this particular vote. Do they have a number for the vote when they took it before? I don't think they do. I mean, but it barely got blocked. There wasn't I think it was like blocked by like two people, or there was two votes in the nay side over and above the yay side of the column. But now that is flipped 66-32. That's a hell of a shift from just two votes blocking to like a 66 vote for yes. That's not bad, man. That's not bad at all. Will the Genius Act do anything? Yeah, it's probably going to do quite a bit. And I guarantee you that quite a bit of it is not going to be stuff that we're going to be in love with. But again, if you keep your wits about you, you're not going to need to. It's not going to need to matter to you. Just buy your Bitcoin, hold your Bitcoin, and we will move on to Circle. And let's just give a background of Circle. Circle is probably the second largest issuer of stablecoin in the world, behind Tether. So Tether is USDT. Circle stablecoin is USDC. Now, you know what I've said about Tether. Its buying of U.S. Treasuries, its weaponization of United States debt, essentially against the rest of the world, with the vehicle being Tether itself and the fuel for that fire being the U.S. dollar and U.S. Treasury printing of debt instrumentation. All right, well, Circle is in there too, but they are far and away behind Tether. However, they have made motions to block Tether in certain ways, like, they shouldn't be allowed to operate in the United States because of X, Y, and Z. They've made that argument to the United States government. They're essentially trying to leverage regulatory moat ideas, United States government, legislation, executive stuff, all of it. They will use all of it to gain a better foothold in the world to come. And the world to come will be, a lot of it's going to be stablecoin. Sure, I know we want it to be Bitcoin. That's the backing. That's the ultimate backing of all this, because stablecoins is just fiat. It's it's really not any different than the digital dollars that we deal with today, other than it's a private issuer, other than the United States government. And from that standpoint, it is a completely different flavor profile altogether. In fact, it's not even a fucking snow cone at this point. It's a cup full of ice cream. It's a completely different thing, right? But we've got Circle in the news again, and I don't like this one at all. Because Circle has explored the potential $5 billion sale of itself to Coinbase or Ripple instead of going through with their initial public offering. This is according to a report, and this entire piece is out of CoinDesk, written by Jamie Crawley. Stablecoin issuer Circle, which did file for an initial public offering last month, has explored the alternative of a sale to crypto exchange Coinbase or to the payments company Ripple, according to a Monday report by Fortune magazine. The New York-based issuer of USDC, the second largest stablecoin, took part in informal talks over a potential sale from which it was seeking at least $5 billion, Fortune reported, citing people who asked not to be identified. Wow, okay, well, I wonder why, but whatever. This figure would be in line with the company's valuation by investment banks JPMorgan and Citi, which Circle hired to help with the initial public offering. Coinbase holds a minority share already in Circle, and the two companies share revenue from USDC's reserve interest income. Ripple recently debuted its own stablecoin, the RLUSD. An offer by Ripple to buy Circle was rejected, Bloomberg reported last month. Circle said in an emailed statement that it is not for sale and remains committed to going public, Fortune report said. But the company aborted a previous attempt at going public via a special purpose acquisition company merger in 2021. So that is literally all we have of that report. So if Coinbase buys Circle, that doesn't bug me as much. And no, I don't like Coinbase. I don't think Brian Armstrong is a really good dude. Coinbase has major issues, major problems. But putting USDC and Circle in the hands of Ripple makes Ripple much, much stronger of a contender. And it's not like they're not already strong. It's just that everything about Ripple and XRP, which XRP is Ripple, I don't care what they say. XRP is Ripple Labs. Ripple Labs is their token XRP. It's a scam. The people behind it are scammers. The entire thing is set up to relieve you of your money. It is not above board. And yet somehow or another, they've been able to fully legitimize themselves in the eyes of regulatory authorities, news media outlets, and a whole bunch of plebs out there who just don't know any better. And all of a sudden, you get Ripple heads. If they get a hold of Circle and they get a hold of the second largest stablecoin in the world, it's not going to do us any favors. Will it kill Bitcoin? No, of course not. That's ridiculous. But giving them any kind of help whatsoever is not. We don't want that on our bingo card. Let's run the numbers. Futures and commodities. I got West Texas Intermediate oil down 0.4% today. That brings it to $62.42. Brent North Sea is down just over half a point to 65.18. Natural gas going the other direction. I swear to God, natural gas is being used by oil or energy traders as a hedge. I swear. There's no reason that natural gas should have an 8.74% jump today to bring it back to $3.38 if it wasn't for the futures guys on the oil desks fucking everybody's lives up. I'm serious. It's like 90% of the time, natural gas moves in the opposite direction of Brent North Sea and West Texas Intermediate. At least 90% of the time, which tells me these guys are using it as a hedge. And what does that tell me? You can't trust any of these people to give you a price on anything that even remotely resembles reality. Nobody knows what anything costs. And it's not just because the money's broken. It's because we've allowed people to make bets on bets on bets on bets. We call those derivatives. And it's just gambling. Oh, but it's price discovery. No, it's not. It's noise. So that the house casino can rake in all the money all the time, and they don't really give a shit what you want. But shiny metal rocks are doing very well today as a group. Gold is up 1.5 points to 32.84 and 5 dimes. Silver is up 1.6%. Platinum is up 4.5%, but copper is down 2/3 of a point. Nope, make that 3/4 of a point. Palladium is up 4.2%. Ag is fully mixed today. The biggest winner is going to be wheat, 3% to the upside. Biggest loser is coffee, 1.5% to the downside. Live cattle, crab walking sideways, slightly in the red. Lean hogs down 0.8%, and feeder cattle are up 0.19%. The Dow and the rest of the legacy indices are all in the red today. Not terrible, but still not all that great. 0.38% to the downside for the Dow. S&P is down almost a half, as is the NASDAQ. S&P Mini is down 0.12%. We have a price of $105,260 after some serious up and down movements over the last 36 hours of Bitcoin. As high as 107, as low as 102,000, going back up to 106, coming back down to 103, and right now it's back up to 105. That's some roller coaster action right there, and it brings us to a $2.09 trillion market cap, which is where we were yesterday. And we can still purchase 32 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,867,219.6 of. Average fees per block are 0.05 BTC, taken in fees on a per block basis. There are 17 blocks carrying 22,000 unconfirmed transactions waiting to clear at high priority rates of 5 Satoshis per VByte. Low priority is going to get you in at 4. Mining looks to be pretty solid. 865.4 exahashes per second. We have an estimated 4% increase in the difficulty rate coming up in 10 days, or 1556 blocks. A reminder to go to bitcoinandshow.com. That's bitcoinandshow.com. Throw me your email and you will get emails of when I release new shows or any other publications that I put on bitcoinandshow.com. Go sign up. I'm not going to give your email to anybody. I swear it. I promise. But I'm trying to build this website up into something that I can be proud of later on. It's just that I'm not really all that good of a guy with how to do web stuff. This is all new to me. All right. So if you give me a hand by throwing me some traffic, that will really, really help my attitude going forward and making sure that I can figure out, how to not screw this up. Anyway, from Yield Knave, which was yesterday's episode of Bitcoin, and I got 1776 throwing me 2,121 sats, saying, knowing the Australian government, they're going to use the ruse of tax CGT refunds to create a nice, handy registry of all Australian Bitcoin owners ready for when they implement an unrealized capital gains tax after the next pump. Don't fall for it, Aussie hodlers. Oh, you know what? He's probably got a really good point there. Progressively Worse with 1,500 sats says, let's get this guy an upgrade for his Lambrofetes. Maybe a new upgrade for his Chevro legs. My guy needs some new shoes over here. Let's go. Much appreciated, Nunya. I appreciate it, man. Pies with 1,000 says, thank you for the shout out, my brother. Much appreciated. Yes, because Pies is engaged. Again, prayers, good feelings, good tidings, positive energy. Send it to my brother Pies. Psyduck with 701 says, Psyduck. Turkey with 500 says, nothing again. Thank you, sir, with 500 says, what are lean hogs? Lean hogs are not fat hogs. Feeder cattle are not live cattle. Okay. The way it works, apparently, is that I buy feeder cattle because I'm going to feed them. So they're ready to be fed, right? So they're younger cattle. And then when they go to the sale barn as live cattle, that's when they get slaughtered for meat. So there's a time differential between when I buy feeder cattle to when I sell the live cattle, which is the fattened version of the feeder cattle. I don't know, it's about a year. Some people do it in a year and 3 months or something like that. It depends. If you're going to keep them on grass, it could take up to 2 years to get to live weight. That's why you see all the CAFOs out there, because they'll keep them on grass until like the last 3 months of their 3 months of their lives, and they'll feed them a whole bunch of corn and shit that they're not even really equipped to eat. They certainly weren't designed to eat grain, but will grain finish them, and they will get to finishing weight 2 months instead of, in a year instead of having to wait 2 years. Lean hogs is the feeder cattle version of hogs. You buy in lean hogs, you feed them until they're fat, and then you take the fat hogs to slaughter. That's about as good of an explanation as I can give anybody. God's Death with 237 says, thank you, sir, no thank you. Yodel with 444 says, all I want is Wingstop. Pies with another 100 says, thank you, sir, no thank you. That's the weather report. Welcome to part 2 of the news that you can use from Bitcoin Magazine's Oscar Zaraga Perez. Bitmine launches Bitcoin Treasury advisory practice and secures a $4 million deal with its first client. So now we're into a consulting for Bitcoin Treasury companies. You don't really need that. All you really need to do is, if you really want to be a Bitcoin Treasury company, is go look at Michael Saylor's webinar and download the PDF which he provided of how to build a Bitcoin Treasury. But I guess it doesn't matter. I guess people just want to hand over $4 million to somebody who says, let's become a Bitcoin Treasury consulting firm, because that looks like what's going on over here today. Bitmine Immersion Technologies announced the launch of its Bitcoin Treasury advisory practice, a BTAP, and a $4 million deal with a U.S. exchange-listed company. The deal saw Bitmine surpass its last year's total revenue in that one single transaction alone, according to the announcement. Let that sink in. Bitmine Immersion Technologies. I've heard about them. They make immersion cooling for Bitcoin miners, but they decided to transform themselves into a treasury advisory consultancy, and they made more money in that $4 million transaction than they did all last year. Do you see where this is going? This Bitcoin Treasuries thing is becoming a little hot, is what I'm trying to say here. So let's be careful out there, ladies and gentlemen. Bitmine will provide mining as a service by leasing 3,000 Bitcoin ASIC miners to the client through December 30th, 2025 in a $3.2 million leasing deal, with a $1.6 million of that paid up front. Additionally, the same client has signed an $800,000 consulting agreement for 1 year, focusing on Bitcoin mining as a service and Bitcoin Treasury strategy. Quote, currently there are almost 100 public companies that have adopted Bitcoin as a treasury holding. We expect this number to grow in the future. As more companies adopt Bitcoin Treasury strategies, the need for infrastructure, revenue generation, and expert guidance grows along with it, said Jonathan Bates, CEO of Bitmine. Quote, this single transaction is greater than our entire 2024 fiscal year revenue, and we feel there is an opportunity to acquire yet more clients in the near future as interest in Bitcoin ownership grows, end quote. BitMine's first quarter 2025 results showed strong revenue growth, with GAAP revenue rising approximately 135% to 1.2 million, up from 511,000 in the Q1 of 2024, supported by an expanded mining capacity of 4,640 miners as of November 30th, 2024, compared to 1,606 the previous year. That's some pretty impressive growth right there, just saying. Despite the growth, the company reported a net loss of almost 4 million in the first quarter of 2025, primarily due to a one-time non-cash accounting adjustment related to preferred stock, and excluding this charge, the adjusted loss was approximately $975,000, consistent with the prior year's results. BitMine's new Bitcoin Treasury advisory practice, along with the $4 million deal, joins a trend. A trend. It's a fad. Think bell bottoms in the 70s, you know, or actual iPods, or what else? What else could there be? I don't know. You name it. There's all kinds of fads out there. And some fads are more... the ice bucket. That's one of the fads, because that shit got people killed. It did. The ice bucket challenge was a fad, and it got people killed. But it joins a trend among public companies exploring Bitcoin, not just as a treasury asset, but also as a source of revenue. Yes, of course, because, yield. Always remember to ask, ladies and gentlemen, where does the yield come from? Moving on to Standard Chartered. News out of Standard Chartered says that Sovereign's indirect Bitcoin exposure via MSTR is growing, backing its $500,000 Bitcoin price target. Yogiti Khatra from the block, in fact, it's actually the block.co. Sovereigns or government entities increased their indirect exposure to Bitcoin in the first quarter of this year by buying shares of MicroStrategy, now known as Strategy, or MSTR being the ticker symbol of the stock. This is according to Standard Chartered Bank, and it added that the trend, notice the word trend, the trend supports its $500,000 Bitcoin price target before President Donald Trump leaves office in 2029. Quote, the latest 13F data from the SEC supports our core thesis that Bitcoin will reach $500,000 level before Trump leaves office, as it transacts a wider range of institutional buyers, according to Jeffrey Kendrick, Standard Charter's global head of digital assets research, wrote in a report published on Tuesday and shared with the block. Quote, as more investors gain access to the asset and as volatility falls, I don't know what you're talking about, but we believe portfolios will migrate toward their optimal level from an underweight starting position in Bitcoin. Overall, the latest Q1 13F filings, quarterly reports that institutional investment managers with at least $100 million in assets under management are required to file, show that direct Bitcoin ETF ownership was disappointing, while rising MSTR stock holdings were very encouraging, Kendrick said. The biggest ETF move came from the state of Wisconsin's investment board, which, as sadly as we all heard last week, exited the entirety of its 3,400 BTC equivalent position in BlackRock's IBIT ETF, the largest of the ETFs for spot Bitcoin and the one most commonly held by government entities. Meanwhile, Abu Dhabi quasi-sovereign Mubadala slightly increased its IBIT holdings to 5,000 BTC equivalent from 4,700, but more notable were increases in MSTR ownership, which Kendrick views as an indirect Bitcoin proxy. Quote, we believe that in some cases, MSTR holdings by government entities reflect a desire to gain Bitcoin exposure where local regulations do not allow direct BTC holdings. In the first quarter, several government entities increased their MSTR holdings, with Norway's government pension fund, the Swiss National Bank, and South Korea's pension and investment bodies each adding the equivalent of 700 BTC. United States state retirement funds across California, New York, North Carolina, and Kentucky added a combined 1,000 BTC equivalent. Sweden and Liechtenstein made marginal increases, while France and Saudi Arabia took first-time positions, though small, signaling expanding sovereign interest in indirect Bitcoin exposure, Kendrick noted. Yay. Quote, "This quarterly 13F data is the best test of our thesis that Bitcoin will attract new institutional buyer types as the market matures, helping the price reach our $500,000 target level. When institutions buy Bitcoin, prices tend to rise." Really? Because I'm not seeing it. I'm not disappointed. I'm not groaning. I'm just saying it seems odd that I can wake up to news that MicroStrategy buys another 7,000 Bitcoin and the price actually drops. I know there's some asshole whale out there with a ever-loving shit ton of Bitcoin who is basically making the MicroStrategy announcement trade. Like Sunday night, Strategy's Sailor announces, basically hints that they're buying Bitcoin. He puts up a graph and he says, this is the price of Bitcoin, or he'll say something snarky, but it will basically be a graph of the price of Bitcoin, and there will be orange dots or green dots on it, and every one of those dots is where MicroStrategy made a purchase of Bitcoin. The following day, Monday, after the markets open, is when Michael Saylor actually announces that MSTR bought X amount of Bitcoin. So the way the cycle works is that Michael Saylor makes a tweet Sunday night. The whale with an ever-loving shit ton of Bitcoin immediately sells a block of Bitcoin to drop the price. And he keeps selling and keeps selling and keeps selling. And then he starts buying it back. This is Sunday evening, by the way. All right, so it starts happening Sunday afternoon, and by the time Sunday evening happens, this price starts to recover. By the time we wake up Monday morning, or maybe a couple hours after, the price is almost fully recovered. Michael Saylor makes his statement that MicroStrategy has in fact bought X amount of Bitcoin, and then we start the week all over again. It is a rinse and repeat cyclic trade. And honestly, I'm just so fucking tired of it. It's boring as shit. But whoever's doing it is making bank because it works. He scares the ever-living shit out of the rest of the world all by his lonesome, sells a shit by selling a shit ton of Bitcoin, and then buys it all back on the cheap and more. So that's what happens when you're selling your Bitcoin on Sunday because you get scared. There's this one guy who's buying it from you at a discount. Just start realizing that. I'm just saying. Anyway, the trend. There's this trend in people buying MicroStrategy, people buying Strike shares from MicroStrategy, people buying Strife shares from MicroStrategy, people buying ETFs, people buying everything that they frickin' can except the actual asset itself. I don't like it. I don't think it's going to kill Bitcoin, but it does put us in a very precarious FTX feeling like situation that I'm not all that comfortable with. So what am I going to do about it? Nothing. Why? Because there's nothing I can do about it. Honey, if you haven't figured it out, Bitcoin is for enemies. Let's move on. Bitcoin malware has been discovered. Chinese printer manufacturer has been implicated. This is Atlas 21. According to local media outlet Landian News, a Chinese printer manufacturer was found to have unknowingly, or at least according to them, I guess, distributed malware designed to steal Bitcoin through its official device drivers. So at the driver level, we've got malware. Pre-Colored, a Shenzhen-based printer company, distributed malware capable of stealing Bitcoin alongside the official drivers for its devices. The company reportedly used USB devices to spread infected drivers and uploaded the compromised software to globally accessible cloud storage services. Crypto security and compliance firm Slowmist explained how the malware works in a post on Twitter, which I'm not going to read because it's in Chinese. But the consequences of the breach have been fairly significant, with a total of 9.3 Bitcoin actually being stolen because of this malware. That's equivalent to just at $950,000 worth of US dollars. The issue was first flagged by YouTuber Cameron Coward. Why would you name yourself that? Whose antivirus software detected malware in the drivers during a test of a pro-colored UV printer. The software identified both as a worm and a Trojan virus named FoxIF or Foxif. When contacted, ProColor denied the accusations, dismissing the antivirus warning as a false positive. Coward then turned to Reddit, where he shared the issue with cybersecurity professionals, drawing the attention of security firm G-Data. G-Data's investigation revealed that most of ProColor's drivers were hosted on the Megafile sharing platform, with uploads dating back to October of 2023. Their analysis confirmed the presence of two, not one, but two separate malware strains, the Win32.backdoor.xrat or redrat.a, and a crypto stealer designed to replace clipboard wallet addresses with those controlled by the attacker. Okay, so pausing to say what that is. A clipboard crypto stealer is one that when you copy, it senses when you hit when you've highlighted something and hit Control C, and that happens to be a Bitcoin address, this thing activates. And when you go to Control V it into whatever wallet software you're using on that same computer, it changes the address to an address that will go to their wallet. And the reason it works is that a lot of people don't check the address when they've pasted it. That's a rule. If you and honestly, don't try to I'll just type it in by hand. Oh fuck, don't do that. Go ahead and copy and paste it. But when you've got what you copied up on one screen and next to it on that same screen, you've got where you've pasted it to, just make sure that those match. Like I picked the last 5 characters, the first 5 characters, and then sets of 3 or 5 characters somewhere in the middle, like once or, one time or twice. By that time, I'm sure that it's the same address. I don't have to do it character by character, but at least check. Otherwise, this thing is going to replace what you paste with the address that they want in there, which is their address, which means you're sending Bitcoin directly to their wallet and not where you wanted to send it. Anyway, G-Data reached out to ProColored, which stated that it had removed the infected drivers from its storage as of May the 8th and had rescanned all files. The company attributed the malware to a supply chain compromise, saying the malicious files were introduced via infected USB devices before uploaded online. Bullshit. Bullshit. I'm calling they did it. I'm accusing them. I think that this is an unknown printer. Their business is probably in the bag at this point. They're probably going down with the ship, and they're like going, we've got at least probably some customers that got some Bitcoin. Let's go get it. Sorry, I just don't believe them. I mean, a supply chain compromise introduced via infected USB devices before being uploaded online. So what, you built your driver and then you put it onto a USB and then you put it back into another computer to upload the driver online? I mean, I'm sorry, but are you insane? I mean, that's what it sounds like to me. I don't know. This just doesn't sound like good practices, which is why I call bullshit. Anyway, Landy and News recommended that users who downloaded ProColor drivers in the past 6 months immediately run a full system scan using antivirus software. However, given that antivirus tools are not always reliable, the Chinese media outlets suggested that a full system reset is the safest option when in doubt. Be careful with your Bitcoin, boys and girls. Just be very careful with your Bitcoin. Now, back to France, where the French government gives crypto entrepreneurs priority police line. This isn't probably going to make non-Bitcoin holders very happy. So, on to France. This is, by the way, written by Protos staff, because this is from protos.com. French crypto entrepreneurs will receive priority access to emergency police services and heightened security by the country's government following a meeting with the country's interior minister today. Pausing right now to say WTF. Is this just backlash from the fact that a whole bunch of people have been tried to be, a whole bunch of Bitcoiners been tried to been kidnapped in France, right? There's something about this that doesn't make any sense. So I'm going to go on. Interior Minister Bruno Retailleau reportedly met with crypto industry players this morning and promised them security briefings from elite units, home security checks, privileged access to an emergency police line, and more anti-crypto asset money laundering training in the force. Oh my God. In his statement today, Retailleau said these repeated kidnappings of professionals in the crypto sector will be fought with specific tools, both immediate and short term, to prevent, dissuade, and hinder in order to protect the industry. Interesting. The meeting was arranged this week to address a recent spate of crypto kidnappings. Just this week, the daughter and grandson of a crypto exchange CEO were almost kidnapped by four masked men on the streets of Paris in a bloody exchange. More recently, the leak of personal Coinbase user data has also raised concerns from various crypto proponents about its potential use by criminals to profile crypto investors for kidnapping and extortion. The Ledger co-founder Eric Larkevec, I can't pronounce his name, reportedly attended Monday's meeting and said that Retailleau has understood what's at stake and that the kidnappings have become a real problem. He claims that in the last 12 months, 50, not 15, 50 attacks have targeted crypto specialists, and 14 of those attacks took place in France. Ledger's fellow co-founder was kidnapped in January while in France and was mutilated by his assailants. They cut off his finger. Anyway, just saying. Okay, so why doesn't France do this to the banking elite? Or do they already do that? Let's pick something else. Is there a police hotline for French fashion designers? Because they got money. Or at least the big names in France do. Do they give extra protection to, I don't know, French steel magnates, if such a thing exists? You see what I'm getting at? This seems odd. It just seems, it does. It just seems odd. My gut feeling says that this is either complete bullshit and it's just lip service by the French government and somehow or another the media's gotten a hold of it, or it's actually real. And if it's real, then you're going to have a whole bunch of people that don't have crypto inside the government or external to the government, but somehow or another has a voice in the government or the ear of the media saying that it's not fair. It's not fair that Bitcoin and crypto people get this kind of treatment where the regular Frenchman on the street eating their baguette or whatever doesn't have these kinds of protection. I guarantee you it's coming. It will be in the news probably in the next couple of weeks of just how unfair it is that these crypto guys see how crypto is destroying France, because now we've got these special people, and then the rest of French people just suck. I guarantee that's going to happen. Who knows? Maybe they'll give special protections for artists like this guy, because this retired artist has lost 17.5 Bitcoin to Coinbase impersonators. It has begun. This latest hack has already claimed victims. And this guy, here's your cautionary tale for the day by Alex Larry, BitcoinNews.com. Ed Suman, a 67-year-old retired artist who helped create large sculptures like Jeff Koons' Balloon Dog, recently lost his entire life savings, over $2 million in digital assets, in a sophisticated scam. The incident is believed to be tied to the major data breach at Coinbase, one of the world's largest digital asset exchanges. Suman's story is part of a bigger wave of attacks on digital asset holders using stolen personal information and has triggered lawsuits, regulatory concerns, and questions about digital security in the Bitcoin space. In March of 2025, Suman got a text message about suspicious activity on his Coinbase account. After he reported that he was unaware of any unauthorized activity regarding his account, he got a call from a man who introduced himself as Brett Miller from Coinbase Security. The guy sounded legit. He knew Suman's setup, including that he used a Treasury Model 1 hardware wallet, which is a device meant to keep Bitcoin and other digital assets offline and safe. Suman told Bloomberg that the guy knew everything, including the exact amount of digital assets that he had. That's dangerous. That's why this guy got fooled. There's no way somebody outside of Coinbase could know that information, right? Wrong. The attacker persuaded Suman that his Trezor 1 hardware wallet and its funds were at risk, and walked him through a security procedure is in quotes, that involved entering his seed phrase into a website that looked exactly like Coinbase in order to link his Coinbase wallet to Coinbase. 9 days later, another guy called and repeated the process, saying the first one didn't work. And then all of Suman's digital assets, 17.5 Bitcoin, 225 Ether, were gone. Yeah, at the time, Bitcoin was around $103,000 and Ether was around $2,500. So the stolen stash was worth over $2 million US. Suman turned to digital assets after retiring from a decades-long art career. He stored his assets in cold storage to avoid the risks of online exchanges. He thought he did everything right. Suman's attackers didn't pick his name out of a hat. It looks like his personal information may have been leaked in the major breach at Coinbase. The company confirmed on May the 15th that some of its customer service reps in India were bribed to access internal systems and steal customer data. Why did they have access to the data? I don't know. This is what bugs me. You will say, well, David, they need access to the customer's data. Okay, so I'm a customer service rep sitting in India. I got a customer that calls me. They tell me their account number. I type their account number into my computer, and it pulls up just that guy's name and number. And you'll say, well, you can screenshot that. Okay, but I don't have a list of all the account numbers, so I would actually have to screenshot every different person as they came through to get all of their information, and I'd probably have to take multiple screenshots per customer. This sounds like somebody was able to get a hold of a master file. Why would you give people in India or any other country or any of your customer service reps for that matter, especially if you're working remote, why would you give access for a single customer service rep to be able to get a hold of a master or a shit ton of data all at once? I would really like to know exactly how this breach was perpetrated. Was it really them just taking screenshots day after day after day after day? Or were they able to get a hold of like a .txt file? And we still don't know. Coinbase hasn't said a word about about the details of the nature of the breach. They just basically said, hey, is these guys in India, they got bribed. How did they get the data? What did they do with the data? We don't know any of that. But whatever. The stolen data includes phone numbers and email addresses, balances, and partial social security numbers. According to Coinbase's filing with the U.S. Securities and Exchange Commission, the breach may have started as early as January and affected 1% of the company's active monthly monthly users, which is tens of thousands of people. And hackers demanded $20 million from Coinbase to keep the breach quiet, but the company refused to pay. Coinbase says it fired the compromised agents and is setting aside $180 to $400 million to reimburse affected users. But so far, Suman hasn't been told if he'll be reimbursed. Since the breach was disclosed, Coinbase has been hit with at least 6 lawsuits. The lawsuits claim the company failed to protect user data and handled the aftermath poorly. One lawsuit filed in New York federal court in May says Coinbase response was inadequate, fragmented, and delayed. Quote, users were not promptly or fully informed of the compromise, the complaint states, and Coinbase did not immediately take meaningful steps to mitigate further harm. Of course not, because Brian Armstrong doesn't care about his customers. He just doesn't. He doesn't need to. At this point, he's institutional. He can fire all of his his retail, Joe Schmo on the street clients today and probably not be hurt at all, because at this point he's so institutionally engaged, he'll just get money handling shit for JPMorgan, because I guarantee you JPMorgan and Coinbase have a deal together. Anyway, there's other lawsuits and some are seeking various damages, but Suman's case is a cautionary tale across the Bitcoin world. He used a hardware wallet, which is considered the gold standard of Bitcoin security, and he was still tricked through social engineering. Even the strongest security is useless if you don't understand how Bitcoin works. It's never too early for Bitcoiners to start learning about Bitcoin, especially on how to keep their stash safe. And the first lesson is never, ever, 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 never share your seed phrase with anyone. That's the end of the article. The next step is to not use Ledger. Why? Why does Ledger know your balance? If it's on a hardware wallet, how does Ledger know your balance? Because you have to connect your hardware wallet on an internet-connected computer to interface with their website, and it's clear that every single time that you do, Ledger's systems are updating your balance on their ledgers. Why? Why do they need to know your balance? Do not ever use Ledger. I've had 3 of them. 2 of them bricked upon update. They are pieces of garbage. Do not use these. Second of all, and that's just the hardware aspect. The third one, I had to buy a third one just so I could get my shit off of my Ledger and put it onto a real hardware wallet, my CoinKite cold card. No, this is not an advertisement for CoinKite. I don't have any deal with them at all. But I'm telling you this. I don't have to connect my cold card to an internet-capable computer to be able to perform transactions. There's not an interface that Cold Card or CoinKite has created that talks to my cold card to update firmware or anything like that. I have to go get that firmware update and then load it in with like an SS or an SD card physically on my cold card to be able to update the firmware. And I haven't needed to update my firmware since I first bought my Mark III. I don't need it. I don't talk to CoinKite's website. They have no idea how much Bitcoin I hold. If you have a hardware wallet from a company that knows your Bitcoin balance, you need to stop doing business with that company, and you need to do it today, not tomorrow, right fucking now. Nobody needs it. This isn't about getting scammed because somebody calls you on the phone and happens to know your Bitcoin balance and therefore you trust them. I'm not even talking about that. Ledger has no business knowing how much Bitcoin you own at all for any reason. Even if they were 100% secured, they still would have to answer the phone to the French government because they're based in France, and the Frenchies have a deal worked out with the United States government. So if our government calls Ledger and says, we want to know what David's balance is on his Ledger, they cannot give them that information because I don't use Ledger. The worst that would ever be able to happen to me with Ledger is that since I've used them in the past, they would know what I used to have. But no one knows what I have right now. The U.S. government has no idea how much Bitcoin I hold. Ledger has no idea how much Bitcoin I hold. You don't know how much Bitcoin I hold, and you never will. None of these people ever will because I have the actual gold standard hardware wallet. I have a cold card. There are other gold standard hardware wallets out there that do not connect to the internet, that do not talk to an interface by the company that built the fucking wallet. Don't do that shit. It is bad for your health. It's bad for your mental health. It's bad for your economic health. Don't do it. Don't do it. Don't do it. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.